Hi, everyone. My name is Christina, and today we're going to be spotlighting Cincinnati, Ohio. So, a little bit about Doorvest before we get into the markets that we currently operate in. We are an all-in-one platform for real estate investing. We help investors, whether they're new or they're buying their 10th investment property, to do it seamlessly on our platform. We take care of everything, including sourcing, renovating, leasing the property, and then taking over long-term property management. The home belongs to you 100%, and Doorvest does not have a stake in it. So currently, we operate in a few markets, and these markets have strong population, economic growth, and they're also affordable. So starting with Oklahoma City, Oklahoma, we're also in Houston, San Antonio, and Dallas, Texas, Atlanta, Georgia, and then, of course, Columbus and Cincinnati, Ohio. All right. So the agenda for today is we're going to go through just some general Cincinnati highlights, take a look at the population and economic growth, then what does the rental environment look like, and then lastly, I'm going to highlight two available homes in Cincinnati. A few Cincinnati highlights. It's the third largest Ohio real estate market. It's appreciating at 4% over the past year. It's affordable, and it has lower property taxes than a lot of major US cities. On to population growth. We're seeing about 0.5% of growth per year, and it's estimated to grow 3% from 2020 to 2030. If we compare this to the Atlanta market and the Columbus market that I highlighted recently, this is definitely a little bit lower in terms of percentage, but nonetheless, very steady and stable. In terms of economic activity, we're looking at three things here. We're looking at job growth, job opportunities. Secondly, government investment. And third, commercial activity. So in terms of economic growth, the biggest employers in Cincinnati are the Children's Hospital, the Kroger Company, which is a grocery retailer, and then the University of Cincinnati. There are two Fortune 500 companies with headquarters in Cincinnati, and that is Procter & Gamble, which you might know. They are consumer packaged goods. They have products like cleaning products and baby products. And then Fifth Third Bancorp, which is one of the largest banks in the Midwest. And then in terms of government investment, there's a $30 million project approved for affordable housing projects in northern Cincinnati, which is awesome. We like seeing this government activity and thinking for the long term. And then lastly, just in, but Margaritaville, which is a very popular resort, they are approved to start building a $140 million resort in Cincinnati. It's at the border of Cincinnati and Kentucky and estimated to bring in 200 jobs. In terms of the renters market, Cincinnati sees a 3.6% vacancy rate, which is below the US average. And unemployment rate is strong as well at 3.6%. And in terms of just the average rents, I am using Doorvest average rents here. We're seeing about $1,600. In terms of home prices, the MLS March 2023 reported that the median price was $285,000. As of today, on Doorvest website and marketplace, our average price is $265,000, which again is lower than what we see in the Cincinnati market. Going to Cincinnati, a home available, and this home is 1477 Kelvin Court. So 1477 Kelvin Court is a 3-bedroom, 1.5 bath. You'll notice that Cincinnati, it's very common to have 1 bath or 1.5 bath, so don't let that alarm you too much. And the expected rent is $1,850. Zoom in a little bit for you guys here. Cool. I'm going to go in and take a look at the photos. Exciting news. This home just completed its renovation. So we have some post-reno photos to share. They're not professional photos yet, but soon to be once we get the home ready for leasing. So let's just take a look at the pre-renovation first. Generally, the home looks pretty good. The kitchen looks good as well. Yeah, in general, this home looks like it was pretty good when we acquired the home. So let's go see what we did in post-renovation. Just from looking at photos, we can tell that the restrooms were updated with new tiles. The flooring, I think, stayed the same. We painted the walls. Okay. New appliances. Earlier, I saw that they were white. So we have new appliances in. The granite countertop stayed the same. Carpets in the bedrooms and the stairs, which is also very common. Recessed lighting throughout. And yeah, looks great. I'm sure there's a lot of things that we don't see just from the photos. So we'll take a look at the renovation list as well in a little bit here. Okay. Okay. So let's look at the investor highlights and see what we can expect. So in terms of year one, we're expecting about 2% in cash-on-cash return, has a 6.5% cap rate, and a monthly cash flow of $114. Year-over-year appreciation is 4%, and this home is in a B neighborhood. At a 25% down payment of $65,000, by year 5, you can expect around $72,000 in return. So this is including your cash flow, your appreciation, and your equity. The home is priced at $257,000, which, if you remembered earlier, the average MLS we're seeing is $285,000. So this is definitely well below the averages. A note from the acquisitions team, I'm not going to read into this too much, but it looks like there's amusement parks in the area, zoos, all within 10-mile radius, and lots of mall and shopping areas as well. When we go into the financials, there are a few perks on this home. So first, with the choice of yours to choose between DV Boost, which is a Doorvest perk to add a little bit of cash flow for you in the first few years, or you can select points pay down, which allows you to work with us where we will pay the lender to reduce your mortgage rate. So one is a bit more short term, right? In the first 3 years, you'll get paid by us $100 in year 1 every month, and then in year 2, $250 per month, and then in year 3, $150 per month. Whereas the points pay down is a longer term play. It will lower your interest rate for the lifetime of your loan. We also have a reduced service fee for this home. So typically our property management is 10%. This one will be 3% for year 1, and it goes back to 10% in year 2. And then again, the rental range on this home is $1,650 to $1,850, and we're going to target an $1,850 rent for this home. Okay, and with Boost applied, because that's what I selected, you can see that cash flow on year 1 in terms of monthly is $114. It does drop to $36 and $8, so you're breaking even by year 3, and then it goes back up. So as a reminder, when you buy with Doorvest, we have a few value props. We have our renovation guarantee. So again, there's renovations that are completed in this home that's already included in the price. So if there's any unexpected costs related to the renovation completed on the property, we'll definitely help you out and cover some of the costs there. We also have a rent guarantee, which is protection on your rent for the first 3 months. And you can also opt in to a rent guarantee extension at a cost as well. And then lastly, the price is locked. Once you reserve this property, it's locked at the price as we stated on this profile. No one can come in and overbid and take this away from you unless you let go of the reservation. Okay. And this home is in the northern part of Cincinnati. Schools are decent. We have a 5 for elementary school and 3s for the middle and high school. Into the renovations, for this home in particular, um, we have a new HVAC, so that's awesome. It had a plumbing scope as well completed on this property, a new water heater. So a lot of CapEx that was included in this renovation. We love seeing that as well. You know, we want to make sure that when the structural needs of the home is taken care of prior to you purchasing the property from us. So you'll typically see we'll highlight roof, foundation, HVAC, water heaters, etc. Okay. Going into the next property is Hawthorne 855 Hawthorne Drive. This property, we're just getting ready with renovation. So what I'm going to share with you is the pre-renovation photos. So this is how it looks like right now without us going in. And you'll see it looks pretty good as is. Walls are already painted. We'll likely do some touch-ups there. The restroom looks fine as well. We'll definitely need to do some landscaping. The kitchen looks good as well with fresh new appliances. Um, we'll likely either get rid of the fridge and do a replacement, or the new residents who move in will likely have to bring their own. But okay, looks good. For the sake of this home, I'm going to go straight into the renovations really quickly so we can see what's going to be done on this property. So it looks like once we get started on renovation, it's going to cost around $47,000, which again is included in the purchase price. We're going to do a full replacement on the roof. Looks like the foundation of the electrical panel is good. We're going to be adding and replacing the smoke detectors. HVAC is going to be included, an entirely new HVAC system, and some updates to the kitchen and the restrooms. Okay, cool. So like I said earlier, one bathroom, 1.5 is very common in Cincinnati. So for this home, it's a 3-bedroom, 1 bath. We're estimating that the rent will be around $15.25, which is pretty standard again for what we see in Cincinnati. In this With this home in particular, again, a 4% year-over-year appreciation and $163 in monthly cash flow. So looking at this graph again, I love looking at this with a down payment of $53,000 at 25% down. You're expected to see around $62,000 in total returns. This includes your cash flow, appreciation, and equity. And this home is priced at $210,000 with that $47,000, I think earlier, of renovation included in this purchase price already. So I think this is going to be an awesome, affordable opportunity for investors who are looking for, a price range in the lower 200s. Again, a note from the acquisitions team who helped us with acquiring this property. Zoos in the area, very short distance to museums. Cincinnati is thriving, as you know, just in terms of their downtowns. There's a lot of green areas and parks, hiking trails, etc. So overall, a great place for families. So in terms of the financials, there are a few perks here. Again, with the highlights, we do offer DV boost or the option to do points pay down. So you can decide on what fits best for you. I'm going to keep with DV boost for the sake of this example. The new thing compared to Kelvin is that this home actually has estimated some instant equity. So what this means is that though we're pricing this home at $210,000, we think that based on our comps, that the valuation of this home may be higher. So you can expect maybe a valuation of $225,000 to $230,000. Again, this is just a ballpark estimate, and we're not guaranteeing this at all. And then also included is the reduced service fee. So again, from 10% property management fee in year 1 to 3%. So for your monthly cash flow, you can expect around $163 in year 1 on a monthly basis, year 2, around $115, and so on. And for this home, it's on the east side of Cincinnati. So earlier we saw a home that was in the northern part. This one's on the east. Overall grade is a B for the neighborhood. It's good for families. Like I said, it's very close to parks, theme parks, etc. And in terms of schools, we see pretty good school ratings here. 6, 4s, and 5s for a high school. And we already went over the renovations. So yeah, so as a treat for some of you who are still on the line, I'll show you an example of a home that just closed, I think maybe a month ago in Cincinnati. This home is 798 Serban Drive. It was is a 3-bedroom, 1.5 bath, and this home rented at $1,775. It also appraised higher. So this home was sold to our client at $237,000. It appraised at $246,000. So $10,000 in instant equity right there. And yeah, generally looking really good. This is how the home looked like afterwards. I feel really good about the Cincinnati market. It's stable, steady, has strong growth potential. And just from the example that I shared here, valuations are continuing to look like they're trending upwards, just given the tight supply in general in the Cincinnati market. And rental rates continue to hold strong as well. Like for this home in particular, it was $237,000 rented at $1,775, which was the higher end of our rent range. And at Doorvest, we'll always try our best to hit that highest rent range. So if you have any more questions about like the way that we underwrite homes, the perks that we have on our properties, definitely reach out to client partners at doorvest.com, and we can provide you more information and resources to help you with your due diligence when reviewing properties. Okay, and with that, I just want to thank you all for tuning in to today's spotlight. We're on kind of like a road show right now. So we've already done Atlanta, we have Columbus, and if you didn't catch those, head over to our YouTube channel. We have that over there. And then next week or so, we'll be highlighting the rest of our cities. So we're really excited to share more about the markets we're currently active in. Okay, well, thank you all again. Have a good rest of your day, and